What's up everyone, welcome back to my channel, welcome back to a brand new video. Today guys, I'm gonna do another risk management video. I did one of these before, but I decided that it's time for me to do a second one since I still get a lot of messages privately of people asking me how they should approach risk management, how they should calculate their lot size, their stop loss, and I decided to do a brand new video. It's pretty much gonna be a lot like the other one, but I really hope that after this video, all of you guys might get an idea of what a good risk management plan is and how you could stick to it. Okay, so before I start the video, make sure you are subscribed to the channel if you enjoy the content, and turn the notification bell on to not miss out on any future uploads. Also, those that want to learn my strategies, feel free to DM me privately if you want to do a one-on-one session with me, or if you want to learn the strategies I use day by day. Also, feel free to join my free signal group. The link will be down in the video description. My IG link and website are also down in the video description. And if you guys have any questions, make sure to drop them in the comment section. I will make sure to reply to every single one of you. Okay, so in this video, I'm not gonna do any chart analysis. I'm just gonna talk more than making a analysis and explain a strategy as we usually do in our other videos. Today I'm gonna talk to you guys about risk management. Okay, so first things first, a lot of you always ask me what lot size you should use. Okay, so this is a wrong question. You should never ask what lot size you should use, but you should ask what risk percentage you should risk per trade. Okay, so here are my opinions. So if you trade a prop firm account, meaning if you trade on a ftmo account or my Forex funds account or any type of prop firm accounts, I highly recommend to risk only 0.5% per trade on a prop firm account. Okay, so this is what I highly recommend you guys to do. On a prop firm account, risk only 0.5% per trade. Okay, meaning if you have a 100k account, risk only $500 per trade. After you know that, let's say you want to enter a buy right here, based off this support level, you want to enter a long position right here. You first put your long position, then you determine your stop loss, where you want to place it. I highly recommend placing stop loss and take profit based off market structure, meaning place your stop loss below or above the zone you entered. In this situation, I would place it below this zone right here and take profit next area of resistance slash support. Okay, so that's how you should place your stop loss and take profit. And after you see what the size of the stop loss is, in this situation it's around a 10 pip stop loss, you then determine what lot size you need to use. Okay, so after that, you know, okay, I have a 10 pip stop loss. What lot size should I input for me to risk $500 per on this trade? So that means that I should use a 5 lot, because a 5 lot on a 10 pip means $500. If this trade was to go to my stop loss, it would have been minus 10 pips, and that would have meant I would have lost $500 because I choose a 5 standard lot, because I knew that this is how I would risk $500 per trade. Okay, so now you guys understand why the approach with what lot size you should use is wrong, and you should never think about what lot size you should use, but you should always think about the risk percentage you want to risk per trade. Because guess what, every single trade will have a bigger stop loss or a smaller stop loss. Okay, this trade right here had a 10 pip stop loss, but if I want to, let's say I want to take a sell right here, let's say I would have took a sell right here. Okay, I would have took a sell after this doji. Here my stop loss would have been a lot smaller. My stop loss would have been almost like a 7 pip stop loss instead of a 10 pip. So am I gonna use a 5 lot? No, I'm gonna use a bigger lot, because why? My stop loss is smaller. Okay, so using a fixed lot size is wrong. Okay, you should use a fixed risk percentage per trade, And then after you input your stop loss, you view the market structure, you know where you want to enter, you know where your stop loss is, then you calculate the lot size, so you will risk this amount on that certain trade. It is very simple, okay? You only have to do some maths. It takes like a couple of seconds, and after that you know what lot size you need to use. Especially for the signals that you guys receive from me in the VIP or in the free signal group. The signals are pending orders, okay? So it is very, very simple for you to actually input the right lot size because you have plenty of time. It's not market execution. I can send a pending order in a VIP and it can trigger hours from the time I sent it. So you have plenty of time to see how big the stop loss is, to see how much you want to risk per trade. Let's say it's a prop firm, you want to risk 0.5% on a 100K account. You know you want to risk $500 per trade. Then all you have to do is to determine how big the stop loss is that I sent in the signal group, for example. And then you have to determine your lot size. It's that simple. Let's say you have a 10 pip stop loss size. That means you have to use a 5 standard lot in order to risk a $500 on that trade. You know, let's say you have a $10 account, a 10K account, sorry. And it's the same concept. You want to risk $50 on that trade. Okay? So that means that you're going to use a 0.5 if you have a 10 pip stop loss, and so on. So having a fixed lot is wrong because it will mess up your risk management plan by a big time. Because as I said, sometimes you will have a smaller stop loss, sometimes you will have a bigger stop loss. Let's say sometimes you can have even a 20 pip stop loss. If you use a 5 standard lot on the 20 pip stop loss, you then risk 1K on that trade. Okay, so your risk management plan is out of the window now. Okay, it's gone. So even though your strategy is profitable, let's say you win 2 trades with a 10 pip stop loss, you risked $500 on those trades, you won both of them, but then on the third one you have a 20 pip stop loss instead of a 10 pip, but you don't adjust your lot size accordingly and put a 2.5 lot instead of a 5 lot, and you still use a 5 lot because you use a fixed lot size. And then let's say you lose that trade, even though your strategy is profitable, you are now at break even. Why? Because you didn't use proper risk management. Okay, so this is way more important than than struggling to get a perfect win rate, because trust me, it's not profitable. It's not profitable, and it's not possible to get a 100% win rate strategy. Okay, as I said, if you use a 1-to-1, 70% on a 1-to-1 is very good. 80% is insanely good. If you use a 1-to-2, 50% win rate is amazing. But you have to use proper risk management, because if you risk 1% on a trade, on the next one you risk 2%, on the third one you risk 0.5%, you will never achieve profitability. Okay? So that's how important risk management is, and I cannot stress this enough, because a lot of people neglect this part, and then all of a sudden they be like, oh man, this strategy doesn't work, I should switch to a new one. And guess what? That strategy actually was a good strategy. The only thing that was missing was your risk management plan. Okay? So trust me, this is way more important than you think, and you should really consider on making a plan. Okay? So now, let's say you have a personal account. On personal accounts, I highly recommend risking 1% per trade. Okay, so let's say you have a 1K account. I guess most of you guys have a 1K account or above. I would recommend risking 1% per trade. I know it's only $10, but trust me, compounding is what's most important. Okay, you have 10-15% months. Okay, in a couple of months, that 1K account will turn into a 2K account. Then you will be able to risk $20 per trade, and so on. Okay, now of course, if you have a $100 account and you want to flip it, then yeah, of course you can go ahead and risk 5% or 10% per trade. But it is also very important, even on those smaller accounts, like a $100, $200 account that you want to flip, because yeah, I understand Risking 1% on a $100 account means that you basically risk $1 per trade. Okay, like I understand. Okay, so if you want to flip that account from the start, before you start trading, please set a risk percentage you want to take per trade. Let's say you want to be very aggressive and you're going to use 10% risk per trade. If it's a $100 account, meaning that you will risk $10 per trade. Okay, but after you determine that, stick to it. Stick to it till you get to, I don't know, $200 or $500. Okay, after you get to $500, then you can say, okay, now I must stop, and now I'm gonna switch my risk percent to a bigger one or to a smaller one since I grew a bigger account. Okay, but don't use 10% risk on this trade and then on the next one you get cocky and you risk 20%. Let's say you get lucky on the second one as well. Okay, now you are on a 30% gain. Guess what? On the next trade, you're gonna be even more aggressive and you're gonna risk 30%. Okay, and keep in mind your strategy might be a very good one. Let's say on the third one you get unlucky and you get a losing trade and you're now at break even. You're now on zero. Okay, so instead of being up in profit, if you would have used proper risk, now you're on break even and you will be like, oh man, this strategy doesn't work, I should switch it. No, that strategy does work. The only problem is your risk management. Okay, so yeah guys, like it is very important to establish this before you start trading on any type of accounts, even if it's a prop firm or a personal account. Please establish, I would recommend, if it's a prop firm, never risk more than 0.5% per trade. Stick to this rule, okay, no matter what. It is very simple. You have to stick to it and that's it. And if it's a personal account, if it's a 1K or above account that you don't want to flip, that you want to compound, okay, over time, I highly recommend risking only 1% per trade. Stick to that no matter what, okay? And if it's a $100 account or a $50 account that you want to flip, then yes, you can use a bigger risk percentage, but after you determine that risk percentage, stick to it no matter what, okay? So yeah, like this is pretty much it for the risk management video. Like these are the steps you guys need to understand and really focus on, because trust me, it is more important than having a profitable strategy, okay? Because even if you have a profitable strategy, if you don't have this risk management plan down, you will never be profitable. It is that simple. And a lot of you also ask me, how should you place your stop loss or take profit? Should it be a fixed pip amount or should it be based on market structure? I highly recommend to base your stop loss and take profit on market structure, okay? Because it's not normal to use a fixed stop loss, because sometimes right here, let's say you used a 5 pip stop loss, you would have got stopped out even though the trade was a good one. You had a fixed stop loss and you would have got stopped out, you know. Instead, what I recommend is look at market structure. Look at zones of resistance and support, and that's how you determine your stop loss, okay? The same goes for the take profit. I recommend using market structure to determine your take profit. Don't have a fixed take profit. Of course, if it's a scalping strategy with a fixed TP and fixed stop loss, then yes. But if you are trading market structure, support and resistance, then you should adjust your stop loss and take profit accordingly based off market structure. Okay, guys? So yeah, this was it for today's video. As I said, if you want to join my free signal group, the link will be down below. If you want to do a one-on-one session with me, make sure to DM me privately on Telegram. And if you guys have any questions regarding this video, make sure to drop them in the comment section. I hope you enjoyed this one. I highly recommend to be very careful with your risk management, as it's very important. And yeah, this was it for today's video. I will see you guys in the next one. Goodbye.